Good morning. Welcome to your daily morning digest for Sunday, February 8th, 2026. I'm here to bring you the most important market moves, crypto updates, and business news from the past 24 hours, followed by today's Life Wisdom segment. Let's dive right in. Starting with global markets, equity markets closed the week on a mixed note Friday, with the S&P 500 posting a modest gain of 0.3%, while the Nasdaq fell slightly by 0.2%. Tech stocks faced pressure as Treasury yields climbed to 4.35% on the 10-year note, continuing their upward trajectory from earlier in the week. The yield curve remains inverted, though the gap has narrowed to just 15 basis points between the 2-year and 10-year. This normalization suggests markets are pricing in a more stable economic outlook, though recession concerns haven't completely vanished. The Federal Reserve's messaging continues to dominate investor sentiment. While the last policy meeting kept rates unchanged at 5.25% to 5.5%, Fed officials have been notably hawkish in recent speeches. The core message is clear. They need more evidence that inflation is truly under control before considering cuts. With core PCE inflation still hovering around 3.2%, well above their 2% target, the market has pushed back expectations for the first rate cut to potentially June or July, compared to March expectations just a month ago. This hawkish tone is keeping pressure on rate-sensitive sectors like real estate and utilities. In Asia, markets showed strength with Japan's Nikkei climbing 1.2% on Friday, hitting fresh 34-year highs. The Bank of Japan continues its ultra-loose monetary policy stance, creating a stark divergence with Western central banks. This policy gap is keeping the yen weak, trading around 149 to the dollar, which benefits Japanese exporters but raises concerns about imported inflation. Meanwhile, China's markets remain under pressure. The Shanghai Composite fell another 0.8% as property sector concerns persist. The government announced new measures to support the struggling real estate market, but investors remain skeptical about whether these interventions will be sufficient to stabilize the sector. European markets are navigating their own challenges. The ECB's recent rate hold has markets debating whether Europe can avoid recession. Manufacturing PMIs across the Eurozone remain in contractionary territory, with Germany's industrial sector particularly weak. However, services sectors are holding up better than expected, and consumer spending has shown resilience. The euro strengthened slightly to 1.09 against the dollar, supported by expectations that the ECB may maintain higher rates for longer than previously anticipated. Now let's talk crypto markets, which have seen significant volatility this week. Bitcoin pulled back from its recent highs, trading around $48,500 as of Friday's close, down about 6% from Wednesday's peak of $51,700. This pullback came after the SEC announced renewed scrutiny of spot Bitcoin ETF marketing practices, creating short-term uncertainty. However, the longer-term picture remains constructive. The spot Bitcoin ETFs that launched in January have now accumulated over $42 billion in assets under management, demonstrating robust institutional demand. Net inflows continue to average $300 to $500 million per week, suggesting steady accumulation despite price volatility. Ethereum is holding the $2,600 level, up about 3% on the week. The upcoming Duncun upgrade scheduled for mid-March is generating positive sentiment around Ethereum's scaling roadmap. Layer 2 solutions built on Ethereum are seeing explosive growth, with transaction volumes on networks like Arbitrum and Optimism increasing by over 40% month over month. This is validation of Ethereum's scaling strategy and bodes well for the ecosystem's long-term competitiveness. In the altcoin space, we're seeing interesting divergence. AI-related tokens are attracting significant capital, with projects focused on decentralized AI compute and data marketplaces seeing triple-digit gains. This mirrors the AI enthusiasm we're seeing in traditional equity markets. Meanwhile, DeFi blue chips like Uniswap and Aave are consolidating after strong runs, with total value locked across DeFi protocols stabilizing around $85 billion. The regulatory environment remains a key overhang, with the SEC's approach to crypto regulation still uncertain, despite some positive recent court rulings. Shifting to technology and business news, the AI arms race continues to dominate headlines. Reports emerged Friday that Microsoft is planning to invest an additional $15 billion in AI infrastructure over the next 18 months, primarily focused on data centers and specialized AI chips. This follows similar massive capital commitments from Google, Meta, and Amazon. The competition to build the most advanced AI systems is driving unprecedented infrastructure spending, which is benefiting semiconductor companies and cloud infrastructure providers. Speaking of semiconductors, NVIDIA reported preliminary results that exceeded even elevated expectations, with data center revenue growing 180% year over year. However, the stock pulled back 4% on profit-taking, as investors questioned whether the AI infrastructure build-out can maintain this pace. Supply chain sources indicate that AI chip demand remains far above available supply, suggesting the shortages that have benefited NVIDIA and others may persist through most of 2026. On the corporate front, there's been significant M&A activity. A major pharmaceutical company announced a $28 billion acquisition of a biotech firm specializing in obesity treatments, highlighting how the weight loss drug market has become one of the hottest sectors in healthcare. Analysts estimate this market could reach $100 billion annually by 2030, driving a wave of consolidation as major pharma companies seek to capture market share. In energy markets, oil prices stabilized around $78 per barrel for WTI crude after a volatile week. OPEC Plus production cuts are keeping supply tight, but concerns about demand growth are tempering price increases. The transition to renewable energy continues to accelerate, with global EV sales now representing over 20% of new car sales. This structural shift is creating long-term uncertainty about oil demand trajectories, even as short-term fundamentals remain supportive of prices. The labor market data released Friday showed continued strength, with 240,000 jobs added in January and unemployment holding steady at 3.8%. Wage growth came in at 4.1% year over year, still elevated but moderating from pandemic-era peaks. This Goldilocks scenario, strong but not overheating, is exactly what the Fed wants to see. However, some economists warn that labor market data is a lagging indicator, and we need to watch leading indicators like jobless claims and hiring intentions for early signs of weakness. Consumer spending remains the wild card for economic forecasts. Retail sales data showed surprising strength, up 0.8% month over month, suggesting consumers are still spending despite higher interest rates and depleted pandemic savings. Credit card balances have reached record levels, raising questions about sustainability. The wealth effect from higher stock and home prices is supporting spending for higher-income households, but lower-income consumers are showing signs of stress, with delinquency rates on auto loans and credit cards ticking upward. Looking at commodities beyond oil, gold is trading around $2,040 per ounce, holding its ground despite higher interest rates. Geopolitical tensions and concerns about long-term inflation are supporting safe haven demand. Copper and other industrial metals are showing strength on optimism about a global manufacturing recovery and infrastructure spending, particularly related to renewable energy and electric vehicle production. And now let's shift gears to today's Life Wisdom segment. Today we're exploring a fascinating concept from Daniel Kahneman's groundbreaking book, Thinking Fast and Slow: The Distinction Between System 1 and System 2 Thinking. Kahneman, who won the Nobel Prize in Economics for his work on behavioral psychology and decision-making, revealed something profound about how our minds actually work. And understanding this can transform not just your investing decisions, but virtually every important choice you make in life. Here's the core idea. Your brain operates using two fundamentally different systems. System 1 is fast, automatic, and intuitive. It's the part of your brain that instantly recognizes your friend's face, catches a ball thrown at you, or completes the phrase bread and with butter. System 1 operates effortlessly and unconsciously. It's your autopilot mode. System 2, in contrast, is slow, deliberate, and analytical. It's the part of your brain that activates when you're calculating a complex math problem, parking in a tight space, or carefully considering the pros and cons of a major life decision. System 2 requires effort and concentration. It's energy-intensive and can only focus on one demanding task at a time. Now here's the critical insight. We like to think we're rational beings who carefully analyze information before making decisions. But Kahneman's research shows that System 1 is actually running the show most of the time. System 2 is lazy. It only activates when absolutely necessary, and even then, It often just rubber stamps whatever intuitive answer System 1 has already generated. Why does this matter so much? Because System 1, while incredibly useful for navigating daily life, is also prone to systematic errors. It relies on mental shortcuts called heuristics, which work most of the time but can lead us astray in important situations. System 1 is where cognitive biases live. Confirmation bias, where you seek information that supports what you already believe. Availability bias, where you overweight information that's easy to recall. Anchoring bias, where the first number you see disproportionately influences your judgment. Let's make this concrete with investing examples. Imagine you see a stock that's doubled in price over the past month. System 1 immediately generates a feeling. This is a winner. Momentum is strong. I should buy. This is fast thinking based on pattern recognition. But System 2 needs to ask the harder questions. What's driving this increase? Is it based on fundamental value creation or speculation? What's the valuation relative to earnings and growth potential? Is my excitement just FOMO, the fear of missing out? Or consider a market crash. Prices are falling, news is negative, System 1 screams danger and triggers a powerful urge to sell everything. This is your brain's ancient circuitry designed to avoid threats. But System 2 needs to engage and ask, what has fundamentally changed? Are the underlying businesses I own less valuable? Or are prices simply reflecting temporary panic? What does history tell us about buying opportunities during market panics? The key to better decision-making isn't to suppress System 1. That's impossible and would be counterproductive because intuition is incredibly valuable, especially with experience. Instead, the goal is to recognize when you're in System 1 mode and deliberately activate System 2 for important decisions. Here's a practical framework. Create decision triggers that force System 2 engagement. Before making any significant investment, run through a checklist. What's my thesis? What would prove me wrong? Am I anchoring on a particular price? Am I being influenced by recent news or market moves? What would I think about this decision if I learned about it 5 years from now? Beyond investing, this applies to everything: career decisions, relationships, major purchases, life planning. System 1 will generate instant reactions based on how things feel. System 2 needs to do the harder work of analysis, considering long-term consequences and thinking probabilistically. One of the most powerful techniques is what Kahneman calls the pre-mortem. Before making a major decision, imagine it's 1 year in the future, and the decision has failed completely. Now work backwards. What went wrong? This exercise forces System 2 to consider failure modes that System 1's optimistic bias would ignore. Another crucial insight: System 2 is a limited resource. You have a finite amount of mental energy for careful analytical thinking. This means you need to be strategic about when to use it. Don't waste System 2 on trivial decisions. Create routines and habits to handle everyday choices automatically. Save your mental energy for decisions that truly matter. Kahneman also reveals that System 1 can be trained. Experts in any field, from chess grandmasters to experienced doctors, have developed incredibly sophisticated System 1 responses through years of practice and feedback. Their intuition is reliable because it's been calibrated by reality. But in domains with poor feedback loops, where you might not learn whether your decisions were good for months or years, intuition can be dangerously misleading. The wisdom here is self-awareness. Start noticing when you're thinking fast versus slow. When you feel absolutely certain about something, that's often System 1 giving you a false sense of confidence. True System 2 thinking is usually accompanied by uncertainty and nuance. It's okay to not be sure. In fact, intellectual humility and probabilistic thinking are signs of sophisticated analysis, not weakness. As you go into your week, practice this awareness. Notice the instant reactions, the gut feelings, the intuitive judgments. Don't dismiss them, but don't automatically trust them either. For the decisions that matter, pause and engage that slower, more deliberate thinking. Ask yourself, am I being driven by mental shortcuts and biases, or have I actually done the hard work of careful analysis? The path to better decisions isn't thinking more, it's thinking better. It's knowing which system to trust in which situations. And it's having the intellectual honesty to recognize that your confident, intuitive brain is often wrong in systematic and predictable ways. That's your morning digest for Sunday, February 8th, 2026. Stay informed, stay curious, and keep thinking slow when it matters.